Good day, subscribers. Welcome back to the Contrarian, everybody. Today I'll be taking us through a deep dive of Big Lots, which is a stock I started buying a couple months ago. Been kind of building a position the last couple months as it's pretty close to almost all-time lows, but at least, multi-year lows this last a couple of months. Hit a low of around $5 a share. It's bounced up to about $12 a share recently, but back down to around $9 right now. So it's just a good point, in my opinion, to for me to just be accumulating a position, which I have been over the last few months in Big Lots. And today I'll really break down why that's the case, because for a lot of people, Big Lots stock might just seem like a boring retailer that's probably going to go out of business in a few years. It's going to follow what Bed Bath and Beyond did last year, just a retailer that continues to build more and more debt and whose business continues to fumble more and more until they finally declare bankruptcy and shareholders are left with nothing. And so I think that's in part why Big Lots stock is down some 80 to 90% from its all-time highs that it hit in late 2021, is just the overall sentiment that's taken over this kind of sector of the retail economy, which is the budget sector, the smaller retail chain sector, which Big Lots is a part of. Ollie's Bargain Outlet would be another very comparable chain to Big Lots as well. Maybe Dollar Tree, something like that as well. But basically, I'll compare Big Lots to these other stocks out there right now. Kind of asking the question, why is Big Lots at such a discount right now? Spoiler alert, it might be because it's very undervalued. But first let's maybe walk through why Big Lots is down so much. And yeah, a lot of it's probably retail sentiment, investors being worried about the next Bed Bath and Beyond happening. But a lot of it could also be because of small cap retail stocks and just small cap stocks generally being down pretty significantly, in the last year and a half. The Russell 2000 and a lot of other passive ETFs have had pretty consistent selling pressure in a lot of these stocks. And so, you can't ignore passive investing and the effect that that's had on stocks in recent years, as, it's more and more of the overall investing world is just passive. It's kind of a mindless machine that plays into how the market functions now, both to the upside, as we saw with GameStop and AMC both becoming the largest stock in the Russell 2000 at a certain point by market cap and therefore by weighting, but also to the downside. And so you can't ignore the effect that selling in Russell 2000 and retail ETFs has had on a stock like Big Lots, regardless of what earnings reports are, et cetera, in the last year. And likewise, looking at the rally this stock had out of the COVID lows, the Russell 2000 rallied quite significantly out of that as well. That was not really based on any fundamental reality. The economy was still in the gutter at that time. It was really a liquidity and passive investing story. There was a lot of liquidity rushing into the markets. The Fed was printing money like crazy. Investors were enthusiastic, buying pretty much anything. But also you had passive investing buying up a lot of shares. And so you really cannot ignore the effect that passive investing continues to have on the market in both directions. So, it's probably a combination of these reasons why Big Lots is down 80 to 90% from its all-time highs. And as we'll take a look now, the revenues, earnings reports have not changed that much to the downside to warrant something like an 80 to 90% sell-off, in my opinion. Obviously, this is all my just personal assessment, but looking at the revenues, I'll put up a screenshot right now of all of this that I'm looking at right now. But it's basically consistent in the last 8 to 10 years. You've seen a little bit of growth here and there, obviously coming out of COVID, all the stimulus there. 2020, 2021, Big Lots did grow in 2021. Their revenue and also their earnings per share jumped significantly, as would be expected in that one year. First quarter of this year came in as a surprise to the downside as well, so that's probably played into the downside as well, going into this later half of 2023 even, we will see their earnings come out the end of August. So that'll be kind of a very interesting, time to see what Big Lots, what the second quarter looked like this year, but also what they're expecting for the last two quarters of this year. So, you know, uh, I guess right now Big Lots is kind of priced in for bankruptcy. Comparing, for example, the price to sales, that the multiple that Big Lots is trading versus something like Ollie's Bargain Outlet or even Dollar Tree. It's really it doesn't compare right now. Big Lots is trading at a big discount, around a $260 million market cap for a company that has about 1,400 retail stores and outlets total. It's a major chain, a major U.S. wide chain, and so, it doesn't totally make sense for it to be there, except if investors were expecting that it would be on the bankruptcy train and eventually it'd be going that direction. And, pretty soon they would be banking on that. The short interest has been fairly elevated on Big Lots as well recently. It did come down in the last 2 to 3 weeks. When I first started accumulating a position in Big Lots, it had about a 40% short interest. It's down now to anywhere from the high 20s to low 20s percentage points on short interest. So still slightly elevated short interest, but nowhere near, the 40% it had when I initially bought into it. And that's a little disappointing, I must say, because I always like the potential of getting in on a short squeeze. Managed to do that with GameStop somewhat unintentionally, but obviously that ended up playing out very well for myself. But you can't ignore the possibility of another GameStop type of moment happening. Obviously, Big Lots never had over 100% of their float short, so that's not going to happen with Big Lots. But you could see a very significant revaluation come if earnings come out better than expected, or if the company offers significantly better guidance than expected. You could see a significant revaluation to the upside as a result. I mean, if you're pricing something in for bankruptcy and something slightly better than bankruptcy is appearing on the horizon, it's going to be revalued to reflect something better than a bankruptcy. So it doesn't take a lot for the situation at Big Lots to improve, in my opinion. Could it get worse? Yes, it obviously could get worse. I just don't see that as likely, in my opinion. Now, I could be totally wrong on this, so please don't run out there and buy a bunch of Big Lots stock because I'm telling you to. I'm not telling you to do anything, but I'm just saying that their balance sheet is actually fairly stable. They could, in theory, maintain their current cash bleed that they've had the last year. They could, in theory, maintain that a few more years before they would actually run out of cash and begin to go the zombie company route of accumulating more debt, and at which point they would be at severe risk for bankruptcy. But even if they were to continue their current bleed that they have had, looking in the rearview mirror at past data, it would take a while for them to go bankrupt at that rate. So bankruptcy, even at the current rate of market suffering, is not that soon. But you can look at their previous earnings reports they put out. They've actually been introducing cost-cutting measures, which maybe kind of spooked investors at first because they're like, oh no, they're cutting costs. They're very concerned about capital and losing money. And yes, that's a good concern for them to have, and maybe that's somewhat concerning for some companies. But it's worth noting that cutting cost measures is very advantageous for companies, especially looking at what happened after COVID, where companies very oftentimes overextended themselves in 2021, and then in 2022 they kind of had a reality check of, okay, we cannot actually grow that quickly as we were expecting, and we overextended ourselves last year in 2021. We're going to trim things back. We're going to close some unprofitable stores in Big Lots case. They're still opening new stores though. I mean, that's a good sign. They're closing the unprofitable ones, which I think is a very good move on their part. It is reminiscent of what GameStop did, what Ryan Cohen had them do, I'm not trying to compare it apples to apples with GameStop, but GameStop was another story where it was completely being priced in for bankruptcy. It was being shorted much more than Big Lots ever was. And so it ended up going the exact opposite way. The company still going right now, probably in large part due to the massive short squeeze that happened. But anyway, that was a story for the history books, and short sellers were completely wrong there and got trapped. So, Big Lots, it's not going to be the same kind of short squeeze story, but I do think it will be a reassessment story, a story of, okay, we got too pessimistic in 2022. We got too, bearish retail again, like we did previously prior to COVID and everything that happened with all these meme stocks. And so, yeah, I do think a revaluation of Big Lots, probably some other retailers as well, will occur. But I guess Big Lots is kind of the big example, pun intended, big example I see right now of a stock that's being undervalued to the downside. That's not really as much related to what I typically would be looking at, which recently has been more commodity focused, precious metals focused. But so Big Lots is kind of a unique position, in other words, of me going long something, that might not be as typical of myself. So all of this being said, I hope you found this video valuable looking at Big Lots. Sorry I didn't go into as much detail as I could have on all of their earnings reports and everything. It might have been a little boring, but I mean, that is kind of what Big Lots is. It tends to be kind of a boring stock, and I do see a lot of opportunity in it right now, almost kind of because it has been seen as a boring stock in some ways. But, all of that being said, I do think it will play out well in the coming months and coming year. It's not a forever position of mine. It's just something I see as as worth getting into right now. So, all that being said, let me know what you think about all of what I just said down in the comments section below. If you liked the video, give it a thumbs up. And I hope to see all of you again at some point.